Hey everyone, welcome back to Corporate Decoder. Today we are cracking open Citius Pharma's annual report, and let me tell you, it is a wild ride from a company trying to turn its fortunes around. Before we dive in, if you love getting the real story behind these corporate filings, smash that subscribe button, and hey, we've got a fantastic community on Discord sharing even more insights, so check out the link in the description. Alright, buckle up, because the very first thing we see in this report is a big flashing red light from their own auditors. They're saying there is serious doubt about whether Citius Pharma can even stay in business. That is a heavy statement right out of the gate. Essentially, it means the company might not have enough cash to keep operating for much longer without some serious help, like raising more money. And folks, managing a pharmaceutical company is incredibly expensive. This is the company admitting they need a ton more money, and there is no guarantee they'll get it, or that the terms will be good. This lack of money is a huge risk factor, and a lot of what we'll see today is influenced by this desperate need for cash. The company's whole game plan right now hinges on one product called Lympha. They're betting big that this drug will be a massive success. It got approved in August 2024 and launched in December 2025, so they've got approval, they've launched it, but the real test is whether it actually sells and makes money. They're also admitting that their estimates of how much money Lympha could make and their other potential drugs might just be wrong. When you are betting the company on a product and your market estimates might be off, that is another big risk. Let's dive into the numbers and see what is really going on. When we look at their financial tables, a few things jump out immediately. For the year ending the 30th of September 2025, revenues were zero, and for the previous year, also zero. This isn't entirely surprising given their business model, but it highlights how crucial Lympha's launch and sales are. Their net loss for the year ending September 2025 was almost $40 million. That is a pretty big hole to be in. For the year before, it was close to around $39.4 million. So they're consistently losing a lot of money. This is why that auditor's warning about continuing as a going concern is so critical. They spent over $9 million on research and development in 2025. This is expected for a pharma company, but it is a lot of money when you are not making any revenue yet. They say R&D costs will likely go down in the future as they focus on selling Lympha and have finished some big trials. That is a good sign for managing costs. But it also means they're shifting focus from creating new things to selling what they have. Their accounts payable, which is money they owe to suppliers, shot up to over $13 million in 2025 from about $4.9 million the year before. This could mean they're buying more stuff on credit because they need it for Lympha's launch, or it could mean they're having trouble paying their bills on time. And look at the license payable money owed for rights to their drugs. It was $28.4 million in 2024 and is still a massive $22.6 million in 2025. This is a significant chunk of debt they have to manage, especially with the auditor's concerns about their ability to keep operating. Now, inventory is a whopping $22 million in 2025, a big jump from about $8 million the year before. This is likely the Lympha product itself ready to be sold. That is a positive sign that they're stocked up for the launch, but it is also a lot of money tied up in product that needs to sell quickly to avoid becoming a problem. Remember that going concern warning. It is mentioned again here in the notes to the financial statements. They estimate they only have enough cash through March 2026, even after raising some money in late 2025. This means they absolutely need to hit a home run with Lympha sales or secure significant new funding very soon. This section is basically a laundry list of all the things that could go wrong with their drug development process. From clinical trials failing, to regulatory bodies denying approvals, to competitors coming up with better drugs. It is a stark reminder that drug development is a high-stakes gamble. They've had a rocky time with Nasdaq constantly teetering on the edge of being delisted because their stock price dropped too low. They managed to get back in compliance for now, but this shows how fragile their situation is. If they get delisted, it becomes much harder for regular people to buy and sell their stock, and it signals serious trouble to investors. They're just being honest here, the stock price has been all over the place and buying it is a risky bet. This volatility is driven by all the uncertainties we've discussed: funding, drug approvals, sales, and even just general market sentiment. This is just a standard note telling you where to find more details about who is running the show, their pay, and who owns big chunks of the company. It is important for understanding the big picture of leadership and ownership, but it doesn't impact the immediate financial health directly. Now, let's get my take on all of this. Looking at Citius Pharma, it is clear they are in a make or break moment. Their biggest strength, if it plays out, is Lympha. It has approval, it is launched, and it is their golden ticket. The recent capital raises, while necessary, also highlight how much they rely on external funding. The auditor's going concern warning is the most critical piece of information here. It underlines the urgency for Lympha to perform exceptionally well in the market and for them to secure further funding. All their other drug candidates like Minoloc and Halo-Lido are essentially secondary efforts right now, needing to prove their worth and attract further investment in a very uncertain future. The company's strategy heavily relies on the success of a few key products, and failure in any one of them, especially Lympha, could be catastrophic. So, what is the story here? It is a classic high-risk, high-reward biotech narrative. They're betting the farm on Lympha, and the clock is ticking. The path forward is incredibly challenging and will require flawless execution and a good dose of luck. Ultimately, Citius Pharma is a company at a crossroads. Their future rests heavily on the market's reception of Lympha and their ability to navigate the perilous waters of pharmaceutical development and financing. It's a story of hope, but one shadowed by significant risk. That is our breakdown of Citius Pharma's latest filing. What are your thoughts on their chances with Lympha? Do you think they can overcome these massive financial hurdles? Let me know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate deep dives. And don't forget to join our Discord community, linked in the description for even more discussions and insights. Thanks for watching, and we'll see you in the next video.